Hello and Happy New Year to everybody. This is Brian Shannon from AlphaTrends.net. We just finished the second closing day of the year, and today is the 5th of January, 2009. The people on television and that told us the big volume would be coming back on Monday, but as you can see here, we're actually below the levels that the market traded on Friday for the NASDAQ at least. The market did hold on to the bulk of its gains. It was down just a penny here today. As we saw on Friday, the market did not only clear the 50-day moving average, but also the recent resistance right here at about $30.80, $30.60 or so actually. But a lot of people were expecting that the rally from last week to fail because it came on light volume, and it still may, but for now there's no evidence of that. What we do see here in the 10-minute time frame is a very steep uptrend line. We see that the market attempted to push higher here about midday, failed to, and then came back down below the daily VWAP in here and kind of went sideways a little bit. I put a little warning out right about here on the blog saying, button your stops up basically because the market seemed as though it was a little bit vulnerable. We do still have an advancing 5-day moving average, so that's good. And two ways that the market can correct are obviously by pulling back price-wise or correcting sideways through time. This morning's lows near about $30.60 will be important over the next couple days, and I expect that it would be actually healthy for this market to consolidate in here a little bit before we're actually able to really push higher if that's what the market has in store for us here. We do again have that rising 5-day moving average here on this hourly time frame. We see that of course the market had that failed breakdown here at about 28.5. It pushed higher from there. Now what we want to see is that this level near about 30.5 or so to act as support going forward. Perhaps maybe we shake a little bit below that level in the 5-day moving average comes up, let's say like this, and maybe it meets it at about 30.25. That would, I think, bring in a new source of supply to this market. In other words, bring some more short sellers in. But I think as long as that 5-day moving average is continuing to rise, intermediate term, we want to give the benefit of the doubt to the buyers unless it breaks below there and basically I guess holds below it for about a half hour or so. But right now I think again intermediate term we are extended, so I would expect a little bit more consolidation either price or time wise here. But the market behaved fairly well. I think a lot of people again were expecting it to pull back, and we didn't get that. On the upside, again, I'm going to point to this level as the next potential level of resistance if we can get moving higher once again with some conviction, and that's up near this $32 level. That's the area where the market gapped down from just after the election and where it had also found resistance. The daily time frame is really just a lot more neutral than anything, with all these moving averages kind of clustered together in here. Let me just change the scaling a little bit so we can see that more clearly and get rid of those trend lines. But we've got the 10 and 20-day moving average crossing up through the 50. If we look at, for instance, the Mexican market, rallied past its 50-day moving average about a month ago, pulled back, found support at the conjunction of the 10 and 20-day moving average, another push higher, then found support at the rising 20-day moving average. So it's possible that our market may make a similar type move where it pulls back to the rising 10-day moving average, finds support there, bounces higher, and then pulls back to the 20. We do have obviously a still very badly damaged chart here on the weekly time frame. The volume here over the last 2.5 weeks has been really small, so you have to really continue to cast an eye of suspicion on all movement in here. And the short-term trends are really where you're going to be, where you need to be focused to make money in this market. And right now, those trends are higher, perhaps just starting to flatten out a little bit, but no real clear sign to sell short yet. We look at all these, 5-minute, 4-minute. These are, these moving averages here. This is the VWAP. So over the last 3 days, the market is above its average closing price the last 2 days. So, and here today it closed right at VWAP. So far In 2009, with 2 days into it, the 2-day VWAP tells us that the average person, is in a profitable position. Obviously, that's not really significant, though. Oil was down. I'm sorry, it wasn't down. That was the semiconductors. Oil was up again today, up 4.5%, bouncing very strong here in the primary downtrend. Perhaps it makes it all the way up to that 50-day moving average. If you're playing oil long in here, remember the definition of trend: higher highs and higher lows. When it breaks down below and creates a lower low, that's the time to get out. It's not time to get out when you see a perceived level of resistance. As I pointed out on Friday, I said that it looked like maybe the market would see resistance up at this area, actually, and it broke past that level, so perhaps now we're going to head up to that $40 or so level. The point is, picking an upside target is a very inexact science. I wouldn't even call it a science, an inexact skill, but if you just listen to the definition of trend and raise your stops up below these higher lows, you're never going to sell at the top, but you're going to be able to hold on to a much larger piece of those gains and move to the sidelines when it becomes a lot more volatile and unclear, and the sellers again get aggressive. The semiconductors continue to do battle with their resistance that we've seen here over the last 2 months, and again, this seems to be forming here on the daily time frame. You can see it very clearly, this cup and handle that I pointed out on Friday. Looking down to an hourly time frame, again, this level here, which is where that we found the resistance, is also the 2/3 retracement from the election high right in here to the low subsequent from that move. So that continues to be the area where the resistance is found. The buyers are getting more aggressive price-wise because we're seeing these higher lows, and they're getting more aggressive time-wise. So it looks as though it may be setting up for a breakout, but I think that, ideally I'd like to see another little pullback, maybe down just below 18, and then make that push higher. So the semiconductors are a little bit extended here short term. If we can see a pullback down towards the 5-day moving average, let's say the market gap down towards that level, I would look on a 1-minute chart for it to stabilize, recapture VWAP, and then get long in there, because I think that would be a very nice opportunity in all these markets for a good purchase. That would perhaps be a good scenario tomorrow. The Russell 2000. This market, again, this on Friday, we'd seen it had broken past its most relative level of resistance in here. There's not most relative, but the most important level that had been resistance in here recently, right around that $50 level. And this market finished with a gain of 18 cents, or 0.36%. On the 10-minute time frame, we can see here that we do still have this pattern of higher highs and higher lows, but that high was just barely squeaked out. So breaking back below here then puts this level in jeopardy, and then perhaps that 5-day moving average as well. It would be good in all of these markets, I think, if they got back down below the recent resistance, and that would bring in, that would have a lot of longs move to the sidelines, and that would become subsequent buying fuel, and it might also bring in some more short sellers who, if the market then recovered, would then be in a position where they may get squeezed, and then we could look at these higher levels such as 52, and then the election high as well right in here. So a lot of little stocks were starting to really move, and some of the ones that I pointed out as far as the January effect, and it's not necessarily that, there actually intraday I'd shown that on Twitter that of the 33 stocks I showed Friday morning before the market opened, all but 2 of those were higher, and the average on the list was up 20% at that time. It doesn't mean that I'm trading those. The point isn't what I do with my money. The point is there's opportunity there. Whether I decide to day trade it or hold it overnight is completely irrelevant. What you have to do is come up with a plan that works well for you, and the way that you view risk and look at the markets and what you're comfortable with. The opportunity was certainly there, and that's what to focus on, is to focus on the opportunity and where you think you may be able to potentially make money from. The financials continue to be the weakest group. They were down 1.6%. And not only were they the weakest in terms of percentage move today, but they also cannot get above this declining 50-day moving average, which continues to cast further suspicion on this group. And if this group fails, this is the one group that could potentially drag the market, the rest of the market, lower with it. It doesn't seem as though the sellers are really quite as aggressive. It just means more of an absence of strong demand in here. But we have to be very mindful of the fact that this is the group that let us down to begin with. So we got to continue to keep an eye on those. And it makes for some great intraday scalps, particularly with the FAS and the FAZ. But anyways, back to here. The 5-day moving average is about $12.20. I think that's going to be important as far as short-term support. Just below that, we have that 1190 or so, where this resistance had that's where the market had made this recent rally from. Look, if we're drilling down a little bit further to a 10-minute time frame, though, it looks like we have lower high in here today from Friday's high, and we came down and we didn't make a lower low, but we came very close to it. So this market is going to be very you're going to need to pay close attention to it. Obviously, that's been the case for a while. S&P 500, this thing's been up 5 days in a row here. Today it was down 11 cents. Maybe it was up 4 days in a row. I don't know. Still not a big return of volume like it was advertised would be. And again, forget about the volume for now, because the only thing that pays is price. And we do have this market past the $92 level that had been, the more important recent level of resistance that the buyers just wrestled control back from, basically by getting and closing above there recently. This market does remain extended. We have a nice pattern of higher highs and higher lows, so you can't sell short yet. But again, I would think that a pullback down towards 91 would still be healthy for this market. So short term, basically, in these markets, we've gotten a little bit overbought. I think there's a lot of hesitation because of the new year and people aren't really quite committing yet. So if we get a pullback, I think it could be healthy for this market, just as long, of course, as it doesn't completely cave in and get back below some of the more important levels below, which are, again, I think the 5-day moving average is going to be probably most important here over the next 2 or 3 days for this market to hold above.